Good morning. Today we are going to start discussing the second part of the chapter, that is Bills of Exchange, class 11th Accountancy. So now in this video we are going to discuss the accounting treatment of bills of exchange in the different cases. So for the purpose we have divided this in two categories, that is bill receivable and bills payable. That means you have to prepare both of the books, the purchaser book or the seller book, and in this you have to post each and every journal entry regarding the bills. The person who entitled to receive the money draw the bill and get it accepted from the person who is liable to pay. As such, the same bill is bill receivable from the point of view of the drawer and the bills payable from the point of view of acceptor. In the other words, same bill is an asset for one person and liability for another person. So different use of bill receivable is quite important. Like he may keep it till the maturity date. He may discount it with the banker before the date of maturity. He may endorse it to some other party before the date of maturity, and he may send it to the banker for the collection. So first case is when the bill is retained by the drawer in his own possession till the date of maturity. When the drawer of the bill keep the bill till the date of maturity, then these journal entries are passed. So here is the example. When X sold goods to Y, so first of all in the books of X, first journal entry will be Y2 sales. When X receive a bill duly accepted by Y, the bill receivable account debit to Y, because Y is debtor here. And when bill is retained by the X till the date of maturity, and after that he will receive the money, so bank account debit to bill receivable. Now second is in the books of acceptor, that is purchase to X, purchase account debit to X account. X is debited here to bills payable because X got bill receivable, that is asset for him, and to bills payable because Y got a liability, and bills payable account debit to bank. Now the second case is when the bill is discounted from the bank. Sometimes the drawer of the bill need money before the maturity of the bill, so he can discount the bill from the bank order to obtain the cash for it, and discounting means here is encashing the bill before the date of maturity or borrowing from the bank on the security of the bill. The bank deduct a certain amount of discount from the face value of the bill and pay the balance to the person discounting the bill. The discount deducted by the bank is actually the amount of interest charged by the bank for lending the money. The amount of discount depends upon the rate of interest and remaining period of the bill, and the following entries are recorded. So before starting the entry of discounting of the bank, first of all we have to make these two entries as usual, and after that when the X discounted the bill from the bank before the maturity period, there will be bank account debit to discounting charges to bill receivable. But in the books of drawer, because he will only deposit the money on the date of maturity, there will be no entry. And when there is date of maturity, because X discounted the bill before the date of maturity, there will be no entry. But on the maturity date, in the books of drawer duly pay their amount to the bank, so there will be entry of bills payable to bank. Now, the third case is negotiation of a bill. Negotiation means the transfer of the bill of exchange to another person in such a manner that the transferee of the bill become the holder, who has the right to possess the bill in his own name and recover the amount mentioned there from the concerned parties. Mode of negotiation are two types. First, only by delivery. When bills of exchange is payable to the bearer, it may be negotiated mere delivery. It means whosoever receives that bill, whosoever having that bill become the holder of the bill. Negotiation by endorsement and the delivery. When the bill is exchanged, payable to specific person or to his order, it can be negotiated only by the endorsement and delivery. Endorsement is assigning the bill for the purpose of negotiation. In this, the owner of the bill sign on the back of the bill with the name of the person to be transferred. Now, when the bill is sent to the bank for the collection, sometime instead of discounting the bill, it is sent to the bank with the instruction to keep the bill till the maturity date and collected its amount from the acceptor on the date. In such case, bank will not credit the customer account until the amount the bill is actually realized by it. So the accounting treatment is when bill is sent for collection, so bill sent for collection account debit to bill receivable. On the date of maturity when you get money, so bank account debit to the bill sent for collection. Retiring the bill under the rebate. Although this topic is not important, but you have to understand what it is. When the drawee make a payment of the bill before its due date, it's called retiring the bill. In such case, the holder of the bill usually allow him discount, technically called rebate. Such rebate is calculated at specific rate per annum for the period of payment is being made too early. The rebate is gained to the party making the payment and expense to the party receive the payment. So first is, if Y retire his acceptance before the due date, bank account debit, rebate on bill debit to bill receivable account. And the journal of the drawee, bills payable, debit to bank to rebate on the bill. So this is the entry as the nominal account. When you give the rebate and you receive the rebate, there will be, when you give the rebate, it will be debited, and when you receive the rebate, it will be credited. Now, dishonor of a bill. So, dishonor of the bill is a very important topic when sometimes the bill is refused to pay the amount on the due date, the maturity, become insolvent. It's called dishonor of the bill. In case of dishonor, holder of the bill can receive the amount of the bill from any of the endorsers or the drawer. For this purpose, the holder of the bill must serve a notice of dishonor to the drawer and each prior endorser whom he seeks to make the liable for the payment. Such notice must be served immediately after dishonor or within the reasonable time. If this is not done, the holder of the bill loses his right to recover the money and from the party to the whom such notice is not served. So when bill dishonor, there will be some liability which is called noting charge. To establish the fact that the bill is properly presented and dishonor, the bill is usually handed over to the person notary public appointed by the court. The notary public again present the dishonor bill to the acceptor for the payment, and if the acceptor still refuse to make the payment, notary public note down the fact, dishonor on the bill itself. Such act of notary public is called noting, and notary public charge small fees for the service rendered by the him, which is called noting charge. Such charge is paid to be notary public first by the holder of the bill, but ultimately recover from the acceptor, because he is a person responsible for the dishonor. So following entry will be made. First is in the drawee account, Y to bill receivable, because the bill is cancelled, so there will be the reverse journal entry. When X pay the noting charge, Y to cash, and usually when compound entry will be made, so Y to bill receivable account to cash. In the book of drawee, bills payable to X, bill dishonor, it will be reverse entry. Noting charge to X, and the compound entry will be BP account debit to noting charge, and not to noting charge, bill BP account debit, noting charge to X, because noting charge is a expense. After dishonor of the bill, there is a chance to renew the bill. Sometimes the acceptor of the bill find himself unable to meet the bill on the due date. In such case, he may request the holder of the bill to cancel the original bill and draw a new bill in the place of old one. If the holder agree, a new bill will be drawn either for the full amount of the old bill or for the balance amount in case of partial payment by the acceptor. In such case, drawer nominally charge interest for period of new bill, and the interest may be paid in cash as more common may be added in the amount of new bill. So there will be entry is, first of all, entry is passed for the cancellation of old bill. So there will be reverse entry. Okay, when Y pay the amount to interest in cash, cash account to interest. When Y does not pay the amount of interest in cash, Y account debit to interest. And when new bill is received from Y, bill receivable account debit to Y. Now in the books of drawee, bills payable to X, because it is reverse entry, so it will be cancelled. Interest to cash, because interest here is an expense, so it will be debited. And interest if not paid in the cash, so interest to X, and X to bills payable. So this will be entry of renewal of the bill. Sometimes the bill which is discounted from the bank got dishonor, so in such case the noting charge will be paid by the bank. Bank will recover the noting charge from the person who discounted from the bill from the bank, and the ultimately noting charge will be borne by the acceptor. As such, the following entry will be passed. First, in the books of drawer, Y to bank, amount of bill plus noting charge, and in the books of drawee, BP account debit, noting charge account debit to X, because noting charge is a expense. So here this video ends. Your work is make both of the books, make both of the books of drawer and drawee and solve at least 10 questions in your notebook. If there is any doubt, you may ask me in your class. Okay, thank you.